So what happened in April 2021? It was pretty volatile in terms of news, in terms of price movement for some of our index names, and we will discuss them all. Okay. So this is kind of a special stock market wrap-up because we added a couple of topics that's noteworthy given the recent additions in terms of investment assets in the Philippine Stock Exchange. So yeah, we will discuss first what happened in the month of April, and then we will discuss what to watch out for in May. And then I added a couple of topics just for today. So we will discuss briefly about what we know all about the Filinvest REIT, and then we will discuss a bit about the FOO details in AC Energy. Afterwards, we will go back to our normal process. We will discuss the long-term picks and our traders playbook picks. So let's define or let's describe what happened in the month of April. So in April 2021, we went down by 72 points or 1.1% to close at 6,370.87. This was actually a pretty volatile week. We were actually supposed to be up this month if it weren't for what happened earlier in the market. Nevertheless, year to date, the PSI is still down by 768 points or 10.8%. So we closed at 6,370.87. So what made the market go down? So there were economic worries given the elevated daily infection cases. So and there were also news that we are now at MECQ until May 14. There are also news from the DOH saying that there are new variants of COVID-19 detected in the country. There are also, I think, psychologically, the total number of cases approached the 1 million mark, so that actually hit a bit in terms of sentiment. But again, these are significant news that made the market go down, but we were only down by 1.1%. So what supported the market was expectations of easing quarantine measures. Earlier this week, you saw the market tried to rally, tried to rebound because of this expectation that it will be a flexible ECQ, and it kind of is, mainly because of the curfew, right? From, I believe, 8 to 5, it's now just 10 to 4 or 10 to 5. And then in terms of inflation, this was kind of an issue earlier this year, but after inflation came in at 4.5, although it's quite high, but it's lower than expectations. And then if you take a look at price action, we are now finding it hard to break above that 6.6 level, 6,600, 6,615. Actually, that 6.4 there is supposed to be a resistance already, and that was proven in the past couple of weeks because the 6.4 now resistance level has been acting as this level where sellers are now taking control, and that has been happening for the past couple of weeks. The sell-off earlier was even complemented with significant volume, so that signals that the sellers are still controlled. So especially if we break below 6,325, there could be further correction. That being said, we have been emphasizing this in our weekly reports that if you're a bit specific on price action, this may not yet be the price where you should buy. Nevertheless, if you're a long-term investor, you could just average down or buy whatever established or notable company that you like. But it's just notable that the PSEI is not yet bullish. If you take a look at the monthly chart, it still shows that we are not yet out of the woods. It's another red candle for the month for PSEI on the monthly candle. So what do we watch out for in May? What do we watch out for in May? Again, lockdown measures. We continue to be part of this flexible MECQ. Will we be downgraded to GCQ? Again, it's all contingent on the number of cases. But in terms of economic data, there are lots of economic data this month. We have the manufacturing data, inflation, GDP. We have GDP on May 11. We have interstate decision on May 13, oil remittances on 17. And then on the US, there are jobs report on May 7, inflation and GDP also the latter part of the month. Globally, there are also GDP data for Euro area and Japan on May 18. Besides that, it's still earnings season, but specifically it's the first quarter earnings season. So this will give us now a signal or some guidance on how fast will the recovery be in terms of corporate earnings. Besides mentioning the corporate earnings, what's more important and what's our role is to find out what are the guidance of the companies as the year goes by. And then, of course, the most important thing is COVID-19 vaccine-related news. The arrival of more vaccines in the country is the most important thing right now in terms of the effect not only to the stock market, but of course, to the people, to the economy, and the like. And again, the movement in bond market. So we should continue to watch that, especially if it has an effect now on corporate valuations, specifically on the equities market. So yeah, so this is the opportunity to briefly discuss what Filinvest Land disclosed regarding their REIT. The properties under Filinvest REIT, so they plan to have 17 buildings, 16 of which in Filinvest REIT and one in Cebu Cyber Zone. Now, if you compare it to Double Dragon, the main difference here is Filinvest Land will lease the property, so it does not own the land compared to DDM REIT, it owns the land. The main comparison, another is the tenancy mix, right? Only 2% is occupied by POGOs for Filinvest REIT. So from there, if you want more stability, probably Filinvest can be the right REIT for you. It's the same with a REIT, right? Limited exposure to POGOs. And another thing to note here is tenants will continue to be dominated by BPOs in the future, given that all buildings are PEZA accredited. That's good. PEZA accredited is good. So in terms of its offer details, so this may still be changed depending on what the company will decide. But in terms of offer prices, up to 8.3 pesos, could be lower. And in terms of their prospectus, they expect to earn or to have a dividend of 0.463 per share. So if you do the math, the dividend yield is projected to be 5.6%. Target listing date is on third quarter of the year. Okay, so that's basically what we know now for Filinvest REIT. So you can put that on your watch list or save up some cash if you want to avail of Filinvest REIT. So next is the details for AC Energy. And I will also provide some bit of info regarding what to think of the company. In terms of details, the final offer price is 6.50 per common share. So this allows AC Energy to raise as much as 12.7 billion from the FOO. If you want to talk about the net, they disclose that they will get around 10 billion from the said FOO if you want to talk about the net proceeds. And the use of proceeds is to develop its power projects, specifically the ones in the pipeline. They will also attempt to repay their loans. And I think the main goal of FOO is to also increase their public float. Currently at 15.6%, they plan to, after the FOO, the public float will be at around 27.8%. The interesting thing here is if you want to be part of the index, having a higher public float helps. In terms of what we think about AC Energy, so we actually released a trader's playbook on this one nearly a couple of weeks ago. And basically, we recognize in terms of price to earnings ratio of AC Energy, it's quite expensive, relatively expensive, but it's a growth stock, right? And of course, if it infuses more energy assets, specifically the international ones, there's a high chance that it will increase its earnings, hence it will have a lower PE moving forward. Nevertheless, we recognize that the market thinks that AC Energy is expensive at around 8 pesos, 7.50. That's why we recommended to buy on pullbacks. And now it has pulled back near to ours to the lower bound of our recommendation at 650, which is exactly the FO price. So that's basically a recommendation. But if you want to talk about the fundamentals, basically the infusion of the international assets is definitely a catalyst for AC Energy. Right? It's not only exposed now to the Philippines, but also to other countries such as Australia, Vietnam, India. And it has a specific goal to have a capacity of 5,000 megawatts by 2025. And it has a goal to divest all of its assets, specifically on the coal assets by 2030, because it plans to be this renewable-only company by then. So if you want to zoom in what we think about AC Energy, this is what we think basically. So far, AC Energy is on track to meet its goal of having 5,000 megawatts by 2025. So something to be definitely to put on all our watch list. Given the growth trajectory, it has the potential to be part of the PSEI. But I'm not going to speculate on that for now, but definitely it has the potential. So in terms of its chart, yeah, you saw their break below the 100-day MA given the announcement of the FO price. Nevertheless, 6,550 is your next support for AC Energy. So in terms of our stock picks, we would like to reiterate that we are going for those who have upside in the next 12 to 24 months. So basically what we're trying to do is to recommend to our clients something that you're looking into long term, right? To something that you can buy and sleep at night. Of course, we recognize that some of these stocks have actually been sold down the past month. Nevertheless, we think that's only an opportunity to buy more, given how established these companies are, how They've already weathered several crises before, and they are poised to remain market leaders moving forward. So first, under the property segment, we continue to like Ayala Land. We have a target price of 52 pesos for Ayala Land, mainly because of its exposure to the residential segment. And yeah, we've been mentioning several months now that we are positive on the residential segment because we expect pre-sales to recover strongly. Developers are expected to address tight inventory levels. On the office side, yeah, we are seeing a bit of POGOs leaving the country. Nevertheless, we expect BPO demand to offset that. So on the residential side, given the significant exposure of Ayala Land, we like the company. Should we reopen, Ayala Land can benefit from the faster normalization of mall rentals and the like. The Ayala Land has been significantly sold down last month, specifically by foreigners, but we continue to see that as an opportunity to buy, especially for the long-term investors. Next one, SM Prime Holdings. For SM Prime Holdings, this is your leader in the property space, and we expect market leadership to maintain post-pandemic. Then to be specific, we estimate reservation sales to pick up strongly in 2021, specifically 20%, on the back of, remittances continue to be resilient. It's still a low interest rate environment. So target price is 45. Next is for Robinson's Land. We forecast RLC's earnings to exceed 2019 levels as early as this year, mainly because it has a project in Chengdu, China. It also has a venture with Shang Properties in Hong Kong land. So basically, the international business can pick up the slack and can result to RLC's earnings already exceed pre-COVID levels. Another is we continue to like consumer discretionaries, mainly because, again, we're looking at upside. You can accumulate the safe havens, the COVID-19 plays such as Pure Gold, URC, but we're talking about which stocks will give you the most upside, and we think the consumer discretionary sector will give you that. First is San Miguel Food and Beverage with a target price of 81 pesos. Again, it's hinged on further reopening. As quarantine measures are further lifted, right? If there are more social gatherings, nighttime activities, it will benefit beer consumption, especially the likes that being owned by San Miguel Food and Beverage, which is San Miguel Brewery, right? And we're seeing a bit of reopening recently, 'di ba? Allowed na 10% dining. So it's slowly picking up already. In terms of easing of restrictions. Nevertheless, expect FB to outperform within the next 12 to 24 months, especially once we reopen. Again, for some people who are asking, we're back into quarantine measures right now. What's the main difference compared to last year? The main difference is vaccine. We have vaccine now. So in terms of fear, significantly less fearful right now. This time we can create a framework in terms of where to invest in, right? And this is our role and this is our recommendation. Next is RHI, another stock that has been sold down for year to date. Nevertheless, it will continue to benefit from further reopening of the economy soon, right? It's just that it's significantly exposed to malls, specifically its specialty stores, department stores. That's why it's not yet being bought up. For us, we can take advantage of this opportunity. Keep in mind that if you take a look at the chart of RHI, it's near its March 2020 lows already. We can ask ourselves, is the situation of RHI the same as March 2020? If you think about that, right, we can definitely see opportunity here. And another thing is, RHI's balance sheet remains healthy. So it can acquire companies if it likes. So it has that war chest post-pandemic. And we're also positive on financials. We can't have a sustainable GDP rebound without borrowing appetite picking up pace, right? But again, the return of loan growth is also hinged on successful rollout of vaccine. So we just like to disclose that we cannot recommend Metrobank because we're part of the group. Nevertheless, our research partner, DBS, Development Bank of Singapore, Vickers Securities, they have a buy call Metrobank at 64 pesos, mainly because of valuations. And it's the same fundamental reasons that we have. It's just that they prefer Metrobank because of valuations. If DBS prefers Metrobank, which banks are picked? So first one is BDO. We actually increased our target price for BDO at to 162 pesos. That's post first quarter earnings, and we think earnings are significantly showing signs of rebound. The bank is trading at a steep discount to historical price to book, right? Basically, investors were looking at the asset quality issues arising from the COVID-19 pandemic. But if you take a look at the recent earnings, lower than expected credit cost booked in the first quarter of the year suggests that credit quality issues are easing, right? So this tells us that there's now an opportunity to accumulate BDO given the improving situation, specifically in the company. And if you want to specify the effect of the create law, changes due to the signing of the create law should result in faster earnings per share growth of 34.5% CAGR or compounded annual growth rate for 2020 to 2022. For BPI, it's the same case. We lowered a bit though our loans growth forecast to 6 and 8% this year, next year, respectively, given management guidance. Nevertheless, we continue to see that there's room for rebound and room for upside. Mainly because it's still trading at 80 pesos, we still see that valuations are not that expensive. So there's room. There's room to earn for BPI. And again, if you want to specify the effect of the create law to earnings per share growth of BPI, it's 24.8% CAGR for 2020 to 2022. Target price for BPI now is 105. Lastly, SM Investments, again, is our top pick, mainly because it captures the exposure to the reopening winners, property, retail, and banking. And if you take a look at the stock price of SM, it has been relatively stable, right? So this is definitely your safe haven, relatively safe haven pick right now, and you have a growth prospect once the economy reopens. At this slide, you will see now the upside of our picks compared to the target price. And for listeners out there, for SM, you have a 30% upside. For LLAN, you have a 61% upside. For SMPH, you have 30% upside. For RLC, 70%. FB, 21%. RHI, 67%. BDO 57%, and for BPI 26% upside compared to the closing price of April 30, 2021. Now on this slide, you will see here our model port. Basically, if you bought the companies according to market cap weighted, you bought them accordingly for their market cap. So for example, SM, given its market cap weight, you have a bigger allocation to SM. If that is the case, your portfolio would have only been down by 8.7% compared to the PSEI going down by 10.8%. Another situation is if you bought equally all of our stock picks, it would have been down by 10.5%, still relatively outperforming the PSI performance by 0.3%. Now, we will share to you our traders playbook picks. So we have 3 for you for this month. So first one is we have Wholesome. So for Wholesome, basically all of our 3 traders playbook picks are related to earnings, right? So first one is Wholesome. Basically, its earnings in the first quarter rallied or surged by 81%, mainly because of lower operating expenses. But if you take a look at sales, it's still down compared to last first quarter of the year. And it's understandable, mainly because last January and February 2020, there were no restrictions at all. Nevertheless, their net income still rallied by 81% because of lower operating expenses. So they have managed to provide a better cost structure, giving them a higher net income, right? And for us, we understand that sales may be muted in early second quarter of the year, but the cost-saving initiatives of the company could help manage the impact of logistical bottlenecks caused by the renewed quarantine measures. And moving forward in the latter part of the year, once you expect sales to further pick up, you will now have a higher sales and yet lower costs. So that will significantly boost net income further. So you will see there, your recommendation is to accumulate Wholesome once it breaks above 590. Next is Meralco, right? For Meralco, it also disclosed its earnings. It's still down by 10.7%. Nevertheless, there were signs of recovery, specifically on the industrial sector. Residential's given that it's higher than last year, mainly because of work from home arrangements. But if you take a look at the industrial sector, it's already higher than last year, mainly because you see the cement steel sectors fully operating, right? But what dragged earnings of Meralco is the commercial sector, the real estate, the hotels, restaurants, education, and the like. But we think that there's room for Meralco's sales volume to further rebound, right? Besides the more relaxed quarantine measures right now, it has a new catalyst, specifically its increased contribution in GBPC. So it is expected to book higher sales from that this year. Earnings could return to pre-pandemic levels as early as this year, and that is quite a feat for an established index company. So that's why we have a call for Meralco. But in terms of price action, still trading within the range. So we expect traders and investors to buy at support, specifically at 260 to 265 for a better risk to reward trade or investment. Lastly, AEV. AEV, which has been significantly lagging in terms of earnings last year, has done well in the first quarter, mainly because all of its subsidiaries have posted double-digit growth, some triple-digit growth. So it's power business, mainly because of higher water inflows, higher availability, because last year I believe there were shutdowns, and insurance claims, right? Nevertheless, if you exclude the insurance claims, core net income of the power business would have still grown by 83%. It's still respectable. Banking also outperformed, mainly because of higher non-interest income. Net interest margins also increased. For the food business, mainly because of higher selling prices. Cement also outperformed, driven by lower costs. Real estate, mainly because of increased construction activity. Those business could continue to sustain their growth, mainly because they have company-specific catalysts. For the power business, it has a new unit, the 668 megawatt Dingin plant. For the infrastructure segment, the common tower business is expected to contribute to revenue and earnings this year, according to management. Then for the cement business, again, they have new capacities in Bulacan and Iligan. So expect higher or sustainable earnings growth moving forward, despite the significant earnings growth that they already posted last first quarter of the year. Okay, so AEV, you can accumulate at current levels, especially after it pulled back earlier, April 30, 2021. Just set your cut loss below 34 pesos if you are a trader. So yeah, this is the performance now of our traders playbook picks. These are our buy calls. The first slide will show you our buy calls. If you take a look at the performance, average year to date is slightly positive compared to PSI being down, mainly because we have a good discipline in risk management, right? We don't only recommend buy calls, we also have sell calls, which we have success also. If you take a look at our sell calls, we have provided guidance both on the buy and the sell. We recognize we only earn from the buy calls, right? But nevertheless, it's good to practice caution, especially the volatile market, especially the downward movement of the market right now, right? If you capture all of those that hit our cut loss, hit our target price both on the upside and the downside, we would have a 52% hit ratio as of end April, right? We look to further improve that as the months go by. All right. Okay, so let me answer now your questions. So first one, do you think the 6.50 per share FOO is still expensive and should be priced in lower than 6.15? Well, I think if you ask me, I think any price at 6 pesos level is good. I was actually hoping it would not go for 7 to 8 pesos, but they price it at around 6 pesos. And yeah, just to combine it with another question, do you could recommend AC Energy considering your consensus target price is only 6 pesos? So yeah, again, I personally have high hopes for the company in terms of long term, right? We recognize that consensus target price is quite lower compared to current price. But again, that's the target price within the next 12 months. So I think my main suggestion here is you can accumulate a bit now, and if it pulls back further, um, you buy more. So technically, the main strategy is you can try to position size AC Energy by buying a bit and having cash allocated when it goes lower, right? Mainly because again, not the Philippine plants and the international power plants are not yet matured. They're still in the growth stage, right? That's why it's not that easy to value the potential moving forward. But should it continue the growth trajectory, it can definitely be more valuable compared to its price right now. Um, and you see the global trend. You see the global trend, the shift to renewable energy, and the Philippines is also doing so. Diba? They're not yet approving, they're not already approving the new coal power plants. The Department of Energy is focused on boosting the renewable energy space here in the country. So you have catalyst local and global. That's what I think for AC Energy. So yeah, you could buy in the FOO if it does. I think the main strategy here is you can avail of the FOO assuming current prices stay. If the market price remains above the FOO, you avail of the FOO, right? And if it's below the FOO price, then you buy at market price, right? Okay. So next question is, Logistics, yeah, logistics. So yeah, all HC and ICT. Well, for all HC, if you take a look at our traders playbook, although it hit our cut loss level, I think I'm still positive on the fundamentals, mainly because you see here the e-commerce trend is here to stay. The growth trajectory may slow down a bit, especially if nag-reopen, but definitely it's there to stay. The e-commerce, like the our option to buy online is here to stay. So that will benefit the logistics, the warehousing businesses, right? Where all HC is focused at. That's why I'm positive. For ICT, it's not only a logistics play, it's really a global trade play, right? And it's one of the companies that you could rely on, given how efficient its cost structure is. Despite the pandemic, it's quite amazing how they managed to maintain their net income. Their net income did not go down as much because you have exposure globally. So despite the Philippines lagging in global trade, they have other countries to pick where it can pick up the slack. So yeah, all HE is your growth, ICT is your matured play. So you could buy both. This is a good question. Any insights on IMI given the current chip shortage? Actually, based on the recent earnings of IMI, they mentioned that their earnings performance would have been better if there were no chip shortages, because they're now deferred revenues, meaning there were revenues that they were supposed to book but they did not book, mainly because there were unfulfilled orders, right? So I think IMI is something to watch out for, but I think IMI did not drop as much year to date, mainly because actually I think it's up year to date. Nevertheless, it went down significantly from its high of 15 pesos because of that. So the question here is, when do they expect that to be resolved? According to management, they expect that to be resolved by end 2021. Something to put on our watch list, because if you exclude the chip shortage problem, IMI has a good growth prospect. It's exposed to the Internet of Things. It's exposed to the growth of 5G. It's exposed to the electric vehicle space. They're providing the certain parts to those sectors, right? That's why they're well positioned as a growth company. So it's something to put on our watch list, definitely. And once the current chip shortage issues go away, they will definitely benefit from the secular trends right now. Another question is, what are our thoughts on AR as well as other mining stocks? For AR, yeah, I sympathize with those who are holding AR. I'm not sure how will it play out, but I think definitely there will be some kind of penalty to the company, but I'm not sure how will it play out with the shareholders. So just keep watchful of the edge disclosures and keep watchful of our daily reports if there are any progress on that front. On other mining stocks, we mentioned several times that we're positive on nickel related stocks, right? So you have Nickel Asia, FNI, right? Of course, their prices have rallied already. So nevertheless, if you're a long-term investor, you could buy every time it pulls back, because they're exposed to the electric vehicle space also, which is a secular trend, not globally, a global secular trend. Keep in mind that our nickel stocks, our nickel companies, they export, right? So even if wala pang electric vehicles here, doesn't matter because they're already benefiting from other countries. They're shipping to China. China heavily exposed on electric vehicle. So I prefer the nickel related issues for now. Okay, so do you advise availing the AEC Energy FOO for us without any base? So if you want to elaborate what do you mean without any base, um, just message here again. Nevertheless, again, it's good to diversify. It's good to diversify into a growing renewable energy, and AC Energy is one of your leaders there. Besides FGen, AC Energy is their leader on the renewable energy space. Um, Again, as I've mentioned earlier, our basis on why we like AC Energies is mainly because of of its growth prospect. It's not yet a mature company. It has growth prospects both locally and globally. Again, it's also exposed in Australia, Vietnam, and India, and those are still growth power plants. It's not yet that established, so it can gather more clients as it goes. So there. So again, should you buy the FOO? You buy the FOO if the market price remains to be above the FOO price, right? And I think FOO will begin on Monday, and currently AC Energy is at 6.80, if I'm not mistaken. So you try to avail to take advantage of the lower market price opportunity. Good question. So what do we think is the good strategy to employ to navigate through the current stock market, considering we're in a pandemic, right? And you're asking through a beginner perspective. Okay, so of course, so we understand that our main picks are related, our main picks are mostly reopening winners, right? But we understand that it's a good way to diversify also into by adding a bit of dividend yielding plays, REITs, even the safe haven COVID-19 plays. So, but our main strategy is, for example, at least you allocate most of your portfolio to the opening winners if you want to have more upside or more gains, probable gains within the next 12 to 24 months. So probably you could allocate 70, at least 70% to the opening winners, 10% to dividend yielding, 10% to COVID-19 plays, and then 10% cash, right? So that could be your strategy. Again, you could adjust the numbers, but our main call here is to allocate most to the opening winners to have that alpha performance within the next 12 to 24 months. Okay, so what's our take on DDMPR? So yeah, we've been mentioning DDMPR the past couple of months. And for us, DDMPR, if you want to have that upside for yield, DDMPR is your play. But again, that upside comes with risk because it's significantly exposed to gaming related BPOs and POGOs. So we're seeing already a flight of you mean POGOs leaving the country, right? If that further happens, if it worsens, that could affect DDMPR already. So it's something for you to consider, given the upside in yield, because again, the main difference between DDMPR and AREIT is DDMPR owns its land. So besides yung rental income growth, yung upside will also come from the land appreciation. So you consider that and you consider the risk. And if you think the benefits will outweigh the risk, you buy. For now, the benefits seem to outweigh the risk, right? But again, if you're that kind of conservative investor, maybe a REIT should be instead be your REIT play. Okay, another good question here is what is the hope of Dito despite news of their launching in Luzon? The price is still not going up. Yeah, we also mentioned this in our previous playbook event that after the launch, after the launch of the operations, it will already be kind of boring for Dito because the most anticipated news of it actually launching their operations has already been priced in. So for us, now this is where fundamentals comes in, right? After they launch their operation, it's already been priced in that they will launch in Mindanao, they will launch in Luzon. That's already expected. I think the main catalyst now for Dito to go to rally double, triple its price is if the numbers show. The numbers meaning revenue, earnings. Although Dito disclosed that they will not be they're not expecting to earn on the net income level after 5 years, right? So that could be your guidance that maybe you could, if you're an investor of Dito, you could still put, maybe you could put your Dito in your watch list first and find other sold down names out there. If you're a trader, then it's your decision to find the support, the resistance, and the like. But if you're looking at it at a fundamental way, and if you're expecting that to be the catalyst for Dito, it could be that may not be the case compared to before because the main um the main catalyst now, the main catalyst before of Dito, which was the launch operations, already happened. So technically nag-sell on news na siya before, 'di ba? From as high as 18. Is it 18, 19? So now 10 pesos na lang siya. Right? Because na price in na. Na price in na siya. So next is what can we say about the tender offer for Manila Water? Yeah, so don't be misled that the tender offer is 13 pesos that Manila Water should trade at 13 pesos. That's not the case because the tender offer price was already disclosed before. So it was already priced in before. So right now, they're pricing on a different set of catalysts. And the main purpose of tender offers for the Rason Group, the Trident Water Holdings, to have a stake in Manila Water, right? So that was the purpose of the tender offer. It's your option to sell your shares, but it's okay to hold your shares if you want MWC to act as your hedge in your portfolio. If your portfolio is kind of risk taking, you could add Manila Water as your hedge. So especially if lumabas na yung details of the concession agreement, and if it's more favorable compared to what is initially expected, Manila Water could go up. So next question, what are your thoughts on CNPF? CNPF, we're actually positive on that one, both on the long term and on the trading side. If you take a look at our traders playbook, we've been positive for CNPF for the whole of, at least for so long, and we reiterated that this April. For CNPF, we expect CNPF to continue to be strong even post pandemic. It has new brands, and that CNPF has been um, doing so well in capturing the demand ever since the pandemic, right? So we continue to like CMPF, buy on pullbacks, specifically 19 to 1950 pesos, which is the support right now. If you're a long-term investor, continue to hold CNPF. So another good question is, which stock is the alpha among our reopening winners? So let me go back to our, if you're looking at the slides, let me go back to our slide where we show our picks. If you're looking at the slide, this is actually in order, with SM being our top pick. But if you mean alpha, if you're referring to upside, then you act accordingly in terms of the upside. So for example, RLC has the biggest upside. That could be your top pick in looking at upside. But fundamentally, SM is our number one. Okay, so there. What's our thought? What do we think about Mega World? Yeah, for Mega World, in terms of in totality, in terms of square meters exposure to Pogo, Meg has the most exposure, right? That's why it's been sold down last sold down in April because of the fear of the effect on its earnings. That being said, for us, that's why we recommend Ayala Land, SMPH RLC instead, because they have that growth prospect on the residential side. For MegaWorld, kasi most of their exposure has been on the office side, right? Which has worked well for them last year because mas stable, stable yung office. But right now, for those looking at upside in the property space, we recommend. Okay, so next question is, do we think Filinvest Land, the listed stock already, will benefit if there will be a fly REIT? Well, keep in mind, in terms of fundamentals, solely on fundamentals, whatever fly REIT, the proceeds of the REIT business, it is actually a requirement to reinvest that. So technically, Filinvest Land, the listed company already right now, should benefit, right? Of course, if you take a look at the share price of, for example, a REIT to Ayala Land, DD REIT to Double Dragon, it seems like the share price has not yet benefited, right? And I understand that may be your concern right now. But if you take a look at fundamentals alone, yes, they should benefit in the long term. Yes, example piece of opening winners, you're looking at the slide right now. Those will be our picks from the property, consumer discretionary, and financials. Well, with regard penny stocks, would there be a handful that you would recommend? Yeah, take a look at our traders playbook. We have several recommendations there. We showed to you one earlier, not necessarily penny stock, but not an index stock. So one is wholesale, right? So if you want more um, non-index recommendations, take a look at our traders playbook. We've been recommending some mining companies also there. So take a look at our research tab in First Metro Securities. Oh, okay, another good question. The mobile app says SM is a hold, but this webinar suggests it's a good stock to buy. We understand that you may be confused, but again, we would like to always reiterate the difference between consensus and what's our call. Consensus, guys, is the average call of all stock brokerages. our recommendation is buy. If you average all the stock brokerage firms, for example, get the majority, koning call nila, it's hold. So that's the difference there. I hope you clear that out also to your friends. I think it's quite a confusion nowadays in terms of our research. That's why if you take a look at Consensus Corner in the last page, we specifically explain what consensus means, and that is the average call, average target price of all the stock brokerages that cover the stock. Okay, thank you. So another question is, what do you think about PNB? That's a good question. We actually had a buy call on that on Traders Day, although we were quite a bit early. But if you take a look at the assets that it's being naibebenta ni PNB, it's 46.7 billion. If you take a look at the market cap of PNB right now, it's 43 billion. So you could see how cheap PNB is right now. But what's the caveat? The main issue of PNB right now is its non-performing loans is higher than most banks, the most listed banks. That's why it's not being bought up that much by institutional companies, even if the sale of these assets were announced last year pa. Again, we agree that PNB is cheap. If you take a look at price to book, in terms of valuations, cheap talaga siya compared to other banks. But it has that, a bit of a problem. Mas mataas yung non-performing loans na compared to other banks. So technically, it's if it from that number alone, the key takeaway there is mas exposed siya sa mga consumer loans na nagde-default. So that's why. Yeah, huge foreign buying today. I think I think it was Regis yata who bought PNB today, if I'm not mistaken. Nevertheless, it was just recently. It's mainly probably they're buying because of the property dividend. Deutsche, yes, Deutsche. Regis, yeah. So they probably bought PNB because of the property dividend. But probably they have not been buying earlier because of that non-performing loans issue. So it's something to watch out for, especially for example, if natapos yung property dividend, baka ibentahan siya bigla, right? That could be a risk because the main fundamentals thing here is that yung non-performing loans niya is somewhat of an issue to the bigger fund managers. For DMC, I would like first to see the first quarter earnings, how well it did, or how bad it did, etc. So I would like to first take a look at the earnings of DMC in the first quarter of the year before we make a further judgment. Because for example, AAV, we were not positive on that one last year, but after seeing the first quarter, okay, we're seeing good signs of rebound. That's why we recommended it. For DNL, yeah, we actually have a buy call on that on Traders Playbook. For DNL, it's already seeing recovery as early as fourth quarter of the year. That's why we continue to like DNL. And a good signal for DNL is, since it's a consumer manufacturing company, it's already seeing higher orders from its clients significantly. Yung mga listed companies, it has listed consumer companies na clients niya, and it's already seeing bigger orders from there. So that's why it's a good sign for DNL. Okay, so what are the thoughts on gaming casino sectors like Bloom, PLC, and PHR? Should we accumulate at this point? Yeah, we understand that they are a reopening play, but same as hotels, they could lag the recovery. They will recover, but they may lag the recovery. For PHR, again, the main catalyst for that one is if mag-operate na yung casino niya sa Mactan, right? Yung resort casino niya sa Mactan. For Bloom PLC, the main catalyst is reopening, right? We should wait for further reopening. This is not yet the type of reopening that they prefer, so we should wait for further reopening news. For example, if mag-GCQ, maybe expect the gaming stocks to rally. So definitely something to put on your watch list. Hindi naman siya dapat i-disregard, right? Put it on your watch list. Definitely a beneficiary of further reopening, but this is not yet the kind of reopening environment that they will be significantly benefit from. Last question is, what's your view on MPI stocks? Your consensus target price has good upside potential, but it's still a laggard this time. Yes, we recognize that the consensus target price is high. Other stock brokers just seem to think that MPI is already still cheap, right? But the thing here is, for MPI, it's exposed to several kinds of companies. That's why medyo naghahalo-halo. But I think I continue to believe MPI is still cheap, is still worthy of investing. Imagine, it has exposure on Meralco, it has exposure on expressways, NLEX, SLEX, it has exposure on hospitals, it has exposure on logistics, right? It's just a matter of time where it will be appreciated. Okay, you could only, maybe you could only allocate a bit to your portfolio if you're not that, if you're quite impatient on MPI, but it's definitely something to expect that may outperform moving forward, given how significantly cheap it is. So there. So thank you for all your questions. Okay, so if you want to hear more from us, besides this, we always invite guests every month to be part of our podcast, and you will be excited on who will be invite next month. One clue is the sector that guests will be included from is tech, is the hot asset right now. Okay, so something for you to watch out for. Our podcast ranked as the top business podcast last August by Spotify, right? And we were also trending as much as number 21 last March 1, 2021. So thank you for for all those who are listening. Besides that, we have lots of events this month. So you could go to our Facebook page, look at our events. So thank you everyone. As always with First Metro Securities is hashtag your future first.